Hi, everyone. So great to see so many people here. Welcome, welcome.
Hey everyone, I'm Peter Askim. I'm the artistic director of the next Festival of Emerging Artists, and we're so excited to have you all here today. We are doing a series of talks for the months of March and April on topics that are really important to us today. So we have a great series going with 410 Media about video creation, and of course, you're tuning in for the cliffhanger that we all want to know about. How do we do our taxes this year with everything that's going on? Um, so let me just tell you just a little bit about the festival, and then we'll get on to the good stuff. The festival is 9 years old, and this is a festival that I started to help artists at the beginning of their careers assemble all of the pieces of the puzzle to having a career. So how to be a great artist, but also how to be an entrepreneur, how to be socially conscious, do great work in all kinds of different arenas, collaborate, and find your own way in this crazy business. So all of these talks that we're bringing to you are for free, and we're paying all of our artists, thinkers, and presenters. It's really important that we all do that and recognize people who are bringing value to all of us. By the same token, we're trying to be helpful to all of you and make all of this content available to you and to as many people who want it for free. So I will drop some links in the chat once we get going. And I'm so glad that you're here and just want to introduce you to Elaine. Take it away, Elaine.
Thank you so much, Peter. Hi, everyone. Thanks for being here and spending a little bit of time with me this evening. I have just shared my screen. So someone on video or with an emoji, give me a thumbs up if you can see the screen. Excellent. Thank you for that. I appreciate it. That also tells me that this is not your first Zoom rodeo because we have some emoji users, we have people on video. You know the drill. We've gotten remarkably good at using these platforms, especially over the last 12 months or so. I will let you know I have the chat window open. So as we are going through this content tonight, if you want to put a question in the chat or call out something or ask a clarifying question, I will keep an eye on that and address your comments and questions as we move through this content. And of course, this content is all about taxes. As Peter said, my name is Elaine. I use she, her pronouns, and I am joining you from Dublin, Ohio, which is just a smidge north of Columbus, Ohio, right in the center of the state. And I am on indigenous Kashkashkia and Hopewell cultural lands. If you are listening instead of watching, I'll share a visual description of myself. I am a 40-ish-year-old white woman with wavy blondish brownish hair that is much longer than it was a year ago because it has barely been trimmed in the past year. And I'm wearing a black jacket this evening and sitting in front of a painting by a woman named Heather Reese that I love that is blue and vibrant and moving in all sorts of fun directions. I have the distinct privilege of working with creative organizations all across the country to help individuals with the business side of their creativity. My area of expertise is money, broadly speaking. I am a CPA and I have a personal financial specialist designation, and I am an accredited financial counselor. So I like to say we can talk about taxes and budgeting and investing and cash flow, and we can cry together about all of those things and how challenging sometimes they are in the arts. Specifically, I'm interested in the education of money and kind of how we use education to build our own self-confidence and change our behaviors in a way that helps us do whatever it is we want to do. I wanted to share a couple of ground rules just as we're getting started. Wanted to, first of all, encourage you to both take space and then also make space. We have about 90 minutes together, so I want to make sure your voices are heard and your questions are answered. So as I mentioned, you can make liberal use of the chat if you have questions or comments to add there. And then hopefully we'll have a little bit of time for Q&A, certainly at the end, and then I'll answer questions throughout as well. I also want to remind you that you all are experts in your own experience. That means I might say something that sounds like it's a really good fit for you, and by all means, take that and run with it. Or I might say something that doesn't really feel like it makes sense within your creative practice. And in that case, you get to decide how you take this information and what to do with it. That might become especially important when we talk about record keeping and sort of habits to embrace or think about as you're thinking about taxes, especially for next year. And then lastly, stories should stay within this space, although by all means take the lessons from the story and carry those with you. What I mean by that is occasionally, especially when we're talking about taxes, we will get stories about people or hypothetical people that may have made choices that are skirting the line of legality when it comes to taxes. We definitely want to make sure all those stories stay here within this space. This is being recorded, so keep that in mind. But by all means, carry the lessons that might arise from any of those stories with you. I'll pause here. If anyone has additional ground rules they'd like to acknowledge, go ahead and throw them in the chat and I will call them out. I'm not seeing furious typing or anything come through, but as I mentioned, I will repeat anything that shows up there. Most specifically, let's talk about what we're doing tonight. We are talking about taxes. And what I mean by that is we're going to go over the federal tax landscape and then spend probably the bulk of our time talking about common creative deductions for musicians. I will also call out some specific changes that you may notice as you're filling out your 2020 taxes, which you might be in the process of doing right now. And then there's one fairly sizable change for 2021 that I hope will make some of you very, very happy. Lastly, we'll talk about some record keeping systems and ways of keeping track of what you need to keep track of for tax purposes so that everything can continue supporting your career in whatever way works for you. Quick disclaimer, although I am a CPA, this is not intended to be tax, legal, or accounting advice, but you probably knew that. So let's get into it. Who can tax you? Not everyone, it turns out, which is lovely. But when we think about taxes, generally we think about them as falling kind of into three main categories. First, there are taxes on money you earn. Those are your income taxes, or your Social Security and Medicare taxes. FICA, we sometimes call those if they're being withheld from your paychecks. Or you might have transaction taxes. So think about sales taxes, or maybe a toll you pay if you're driving on the highway somewhere, right? That's a tax that's imposed at the moment of a transaction. That might come up in your practice if you sell merchandise at performances, or depending on whether or not you're running your own ticketing platform, if you're selling tickets to something. In some states as well, you may encounter sales tax on digital downloads of your music. So occasionally we see sales tax coming up for musicians. And then the third category is property taxes. This is a tax on something you own, not at the point of transaction when you buy it, but when you own it on an ongoing basis. So real estate is typically where this comes up. Our focus tonight is going to be on income taxes, although if you have specific sales tax questions, feel free to throw them in the chat as well. So let's talk about how federal income taxes work. This is my version of a simplified picture of sales tax in the United States. I think this looks prettier than the actual tax form itself, and it's slightly less complicated because, as you'll see, there's a whole lot going on with these tax forms. And the tax form starts with some information about you, the human, or your household. This is where we share the personal information that the IRS needs from us, including your name, your filing status, and any dependents you may claim on your tax return. That starts way up at the beginning, and then everything gets harder from there. The next part of the tax form starts to become really important for creative entrepreneurs. This is where you enter any income you have earned from W-2 jobs. So that's a job where you are treated as an employee. This may come up if you are, for example, a performer with an orchestra and you are paid as a salaried employee. You would get a W-2 at the end of the year. You might have other performance gigs where you're paid as a freelancer. So that income goes in a separate spot on your tax form. Or you might have educational income. If you're teaching a one-off workshop, you are probably being paid as a contractor or a freelancer. But if you are teaching in a K-12 system, or maybe you're teaching for a studio that sort of manages your students with you, they might be treating you as an employee as well. So the first thing you need to figure out is, how do you earn your money? And it's complicated because from your perspective, you might be performing, period, full stop. You might not care if you are performing in a small group, like a chamber group, or if you are gigging or acting as a sub, or if you have a full-time performance gig as a W-2 employee. From your perspective, you're still performing. But in the eyes of the IRS, it very much matters how you are being paid. Because if you are paid as a W-2 employee, there are no deductions for any expenses you incur out of pocket. So that means no transportation deduction, no deduction for any of those ordinary and necessary business expenses you might incur as part of your profession of being a musician. But if you are self-employed, and you are gigging or having contract income or charging students directly for lessons, if you have self-employment income, then you get all of the ordinary and necessary business deductions that go along with generating that income. And as I mentioned, from your perspective, there might not be any difference. You might view everything you do as essentially being the same, but in the eyes of the IRS, it really, really matters if you are paid as a W-2 employee or paid as a 1099 freelancer or contractor. Here's why it matters. Essentially, it comes down to geography, because the type of income you have gets reported in different spots on the tax return. If you have W-2 income, that just goes on the front of your 1040. That is probably the least interesting way to be paid, although it's arguably the most stable. So this is what most individuals in the United States have. Sometimes that's all they have, and that means their taxes are very, very easy. For creative individuals, though, you might have some W-2 income, and you might also have 1099 income, which would be reported on your Schedule C. You might also have sales of merchandise or of music or something like that. Those sales would be reported on your Schedule C as well. And depending on the type of work you do, you may also win awards or receive grants to support various projects you're pursuing. And those awards or grant income might show up on the front of your 1040, but most of the time they're probably related with your creative business. So they're probably showing up on your Schedule C. I'll pause here for a moment just to say Schedule C is the tax form you file if you are running a business. If you are a sole proprietor, so the only owner of the business, or if you have formed an LLC, a limited liability company, and you are the only owner of the limited liability company. In either of those cases, you'll be filing a Schedule C to report the income and expenses from that business. If you have a partnership or an S corporation, you're probably filing Schedule E. All of the same types of deductions apply, regardless of what type of business you are. So for simplicity's sake, I'm going to focus on Schedule C. But know that if you're part of a partnership or an S corporation, everything is still the same. You just have a different schedule to file. Once we're looking at this other income, right? So pretty much anything that's not from your W-2 job or not from various investments you might have, the front of the tax form, the 1040, punts us to something called Schedule 1. And then we go look at Schedule 1 and we see there's a lot of different detail here. I'll draw your attention to line 7. This is where unemployment compensation would be reported. We know many folks experienced unemployment during 2020, some for the first time. And for some individuals, it was a bit of a surprise that income you collect from unemployment is taxable income. Depending on what state you live in, your state may have been withholding taxes from those payments, or your state may have said, you're welcome to withhold tax payments if you want to, but for many individuals, especially those that needed the funds, withholding for taxes wasn't really feasible at the time. So unemployment compensation taxable income reportable on Schedule 1, right here on line 7. And by the way, this is true about regular old-fashioned unemployment. It's also true about pandemic unemployment assistance that extended to freelancers and self-employed individuals. And it's true about those additional unemployment payments, the $600 or $300 on top of regular unemployment that was paid out last year and now has been extended through March 14th, although possibly longer depending on the status of the legislation that's being debated right now. So unemployment shows up on Schedule 1. Also on Schedule 1 is any income you have from your business. So this is where we get into the really interesting stuff on Schedule C, right? You're sort of seeing kind of the domino effect that comes up in tax world, right? We start on one form, then we go to another, then it sends us to another one. And this is a huge source of frustration for many people. And I totally and completely get it, right? So just know that, we'll just continue to walk through this slowly. Question in the chat that just came to me privately about the stimulus package adjustment to taxes paid on unemployment in 2020. Yes, I think there's a really interesting conversation to be had about that. And as this questioner pointed out in the chat, there are some questions around that with the current legislation. I have not read the final bill if it was passed today, or sort of what the reconciliation between the House bill and the Senate bill will look like. The question is basically, will some of the taxes on unemployment possibly be refunded? Possibly. I think I wouldn't bet on it or count on it, if I'm being honest. I think, odds are it's going to be continued to be treated as taxable income, but certainly, if there is an adjustment to the legislation, then that might come through in next year's refund. So this is what your Schedule C looks like. This is the profit or the loss from a business you are running. And I'll draw your attention to box B, sort of in the top right of this form. And it says, enter the code from the instructions, which is very cryptic. But the code from the instructions is basically your standard industry classification code. And this tells the IRS what industry you are operating in. And this becomes important because many of the deductions hinge on whether they are ordinary and necessary in your industry. The code for independent writers, artists, and performers is 711510. So depending on what type of work you do, that might fall under that big, broad category for independent artists, writers, and performers. Or, if you are primarily an educator, you might have a different code. Or if you happen to also be a graphic designer, you might have a different code as well. But again, that's your standard industry classification code, and they are all listed on the last 2 pages of the Schedule C instructions. So let's step back for a second. If you're filing Schedule C, you are essentially saying that you are in fact running a business. But what does that really mean? Sometimes we'll hear about individuals who will have losses for several years being challenged by the IRS. And the IRS will say, how can you be running a business if you're not making any money from it? And of course, we know in the arts, there is never a guarantee that you will have a profitable business. So making money from your business is good, right? I would advise that if at all possible. But you are not required to make money from your business for it to be a business in the eyes of the IRS. What the IRS looks for are a couple of different things. Do you approach it professionally? And are you keeping books and records? So are you tracking customers and clients? Are you tracking sales? Are you tracking your expenses? If you're doing something just for fun, you're probably not taking the extra step to keep those sorts of professional records. So doing that indicates you are approaching it as a business. The next question is, do you spend enough time on it to make it profitable? And this can be challenging in the arts as well, especially when we have a lot of different things we do. But To the extent that you are spending time on your business to make it profitable and you are regularly engaging in that business, then you're in good shape. The next question is, do you depend on it for your income? Again, for many people, the answer to this is no. It is supplemental income, or you have additional income from other W-2 sources that help cover your bills. And that's okay. You don't have to depend on it for your income, but the more you do and the more money you make from it, the stronger your argument that you are in fact running a business. Lastly, do you have the knowledge needed to make it successful? And here's where sometimes we see people running into trouble if they are still in school or if they are sort of at the very, very beginning stages of running a business. Because arguably, if you're still in school, you may not have the expertise to make your business successful. But I also know a whole lot of students that are selling work or performing or earning income from these other sources. But in general, this is what we're looking for. I would say that simply by you attending here tonight, you are approaching what you're doing professionally. You are attempting to build all the knowledge you need to make it successful from a tax perspective. And I'm assuming you're regularly engaging in your music activities. And we can make sure your records are nice and neat and professionally organized so that you can meet these various criteria. And again, this tends to be a question that comes up a lot, especially in the arts, because not all arts businesses have positive net income each year. There's a great question in the chat. Does the SBA loan for economic injury disaster relief or disaster recovery, that's the EIDL, go in the unemployment compensation line on the 1040? No, it does not. So this is an interesting question. If the EIDL money you're talking about is the full amount of the loan, that doesn't get reported on your tax form anywhere, right? Because that's a loan. And then you will pay that back starting this summer, I imagine, with interest, right? So the interest expense would then be deductible on your tax form, right? But the receipt of the dollars and then the paying of them back wouldn't go on the tax form because that's a loan and then a repayment. However, if you're talking about that extra $1,000 advance that came early on, so let's say you applied for the EIDL and they offered you $12,000 and you said, sure, I'll take the loan, and they gave you a $1,000 advance on that loan, that advance turned into a grant. And it turned into the kind of grant that was forgiven under the PPP program, yet another program from the SBA that was meant to provide relief last year, starting last summer. So if you received the grant or any PPP dollars that were then forgiven, then that would not go on your tax return either. If you got another type of grant, even an emergency grant, you may have gotten a 1099 for that, and then you would report it on your Schedule C, but it would not go in your unemployment compensation line. I hope that helps. There were a whole lot of dollars flying around last year. So if it is a forgiven loan that is not counted in your taxable income based on how the EIDL and PPP programs were structured, right? So that is not taxable income to you. If it is a taxable grant, it would probably go on your Schedule C because you probably received it as part of your business. If you received it for you personally, it would go in the other income line on Schedule 1. And then unemployment would just be the unemployment that came from your state government. I hope that helps. Great question. So let's pretend you are running a business, right? You're engaging with it regularly, professionally, you're keeping records, all of that good stuff. If you are, then that naturally begs the question, what expenses are deductible? So let's start with this idea of deductible. An expense is deductible, so something is a deduction or a write-off if it reduces your taxable income. So that is an expense that is ordinary and necessary and effectively connected to your business that you can use to reduce your taxable income, right? You may have seen the image on the previous slide of David Rose from Schitt's Creek. There was a fabulous scene when he was working at the Blouse Barn talking about write-offs and whether write-offs were the government paying you money. They are not. That is not what a write-off is or a deduction, right? A deduction simply reduces your taxable income. So that's what we're talking about here. And in general, business expenses are deductible to you. They are deductions if they are ordinary and necessary and effectively connected to your trade or business. You've heard me use those words a couple of times. Those are very specific IRS words. And here's what they mean. An expense is ordinary if it's common and accepted in your industry. And it is necessary if it is helpful and appropriate for your trade or business. Remember how I said that the business industry code becomes important? This is partially why, right? The IRS is looking to understand from all of the metadata what is ordinary and necessary for individuals in each business code. Then the other piece is this effectively connected to your trade or business piece. And that's essentially you explaining in your records how something is a business expense as opposed to a personal expense. Because in general, personal expenses are not deductible, but business expenses are deductible. For example, I have a daughter, she's 11, and she planned to participate in something called fifth grade strings. This is when students in fifth grade begin preparing for orchestral instruments, and she wanted to play the cello, right? Purchasing a cello for her is a personal expense, or renting a cello is a personal expense, right? There is no deduction there. If, however, she were to be a professional cellist, all of a sudden, purchasing an instrument is ordinary and necessary and effectively connected to her trade or business of being a professional performer, right? So it is the explaining of the business purpose and that connection from the sort of receipt to the business purpose that helps take a personal expense and characterize it as an ordinary and necessary business expense. So this is where they go on Schedule C. This is an image of what the expense section on Schedule C looks like. As I mentioned, it's not that pretty. You will also notice these expense categories were not designed for musicians, right? They weren't. They were designed for general businesses that exist in the United States, which means there's this line way down at the bottom, 27A, and it says other expenses. And then it says from line 48. So if you go all the way down to line 48 on your Schedule C, you'll see line 48 says other expenses, and then it includes a whole lot of blank space. So if you have an expense that doesn't fit really well into a different category, you can put it in your own category in this other section. And we know from IRS data that individual artists, writers, and performers often have about 50% of their expenses that fall in this other category because the categories simply don't capture the types of expenses they have. There's a question in the chat about this business purpose. So this question says, what if the item was purchased for a business purpose, but it can be used for personal purposes? And that's a great, great question. It sort of depends on the item. So if it is something that is overwhelmingly business in nature, so let's say it's a subscription to some sort of, software platform that you need to compose, for example. In that case, it's a business expense and I'm not worried about it, right? Even if occasionally you use it for something personal. Same thing is true with office supplies, for example. If your office supplies generally are used for business purposes, think ink for your printer, for example. You have it and you're printing off grant applications or your tax return or sheet music you might need, right? But every once in a while you print something personal, it's probably fine. A different type of thing, though, might be something like an article of clothing. And that's where we have some of these special rules. If it's an article of clothing that you can wear somewhere else, even if you wouldn't, then the tax rule says that is not deductible to you. It's a great question. And we'll come and talk a little bit more about clothing in a few minutes, because I know that's a big deal for musicians, all that performance attire. But let's talk about some of those other specific examples. Here's one: professional support. So if you are hiring an accountant or an attorney or a web designer or something like that, do we think that's deductible for your business? You can vote in the chat, or you can vote with your emojis, however you'd like to participate. Do we think professional support is a deductible expense? I'm seeing yeses. Yep. Some are coming to me private. Some are going to everyone. You can vote privately. You're allowed to do that. And some emoji participation. Yeah. Professional support is generally deductible. We want to make sure we're documenting the business purpose, right? So for example, hours spent for an attorney to review a contract, right? As opposed to hours spent on an attorney to draft your personal will, for example. So document that business purpose. And then make sure it does relate to the current business you are running, as opposed to a dream of starting a future business. I would also say, if you are thinking about professional support, my examples were attorney, accountant, web designer. But perhaps you're thinking about hiring different types of professional support. Maybe you are hiring an audio engineer, or maybe you're the person who receives payment for your chamber group, and then you pay other musicians that perform with you. In those cases, the audio engineer could fall in this professional support category, but the other musicians probably fall into the category of contract labor. So these are other individuals that you are paying as contractors, not as employees. So in that case, you want to make sure that you are issuing them 1099s at the end of the year, if you pay them more than $600, just like you are receiving those 1099s from all of the individuals who pay you. How about hardware or equipment? This could be your instrument. This could be music stands or other sort of performance props. It could be, what else could it be? A stand or some sort of, hardware piece that you need, maybe a performance computer. Do we think that's deductible? I'm seeing some nods, couple yeses in the chat. Yeah, I agree. Probably deductible. Again, we want to document the business purpose. And if you have insurance on the hardware or equipment, that insurance is probably deductible as well. Many musicians have additional insurance policies on their instruments, right? So make sure you're capturing that as a business expense. You see here this middle piece that says bifurcate the deduction if there is personal use. This would be for something like your cell phone. Let's pretend you are a musician and you are performing regularly and you are teaching students out of your home studio, all of which is 1099 freelance work, right? You probably use your cell phone for business purposes. You probably take calls on it. You probably track expenses on it. You might have other apps related to music that you use your cell phone for. Maybe you are promoting your stuff on social media, right? There is arguably a strong business case for having a phone. Subscribing to a phone and its data plan feels like an ordinary and necessary business expense, and you can track the usage of your phone that is effectively connected to your trade or business, all of which is totally fine. But when it comes to something like your phone, right, the IRS calls that a listed asset, which means that is the type of thing that needs to be used at least 50% for your business. And then if it is used 50% for your business or more, then you can track the percentage and deduct the business use of that asset. So in the case of your phone, that might be the original purchase price in the year you buy it. And it could probably be a percentage of your ongoing monthly bill, right? Ordinary, necessary, effectively connected to your trade or business. The challenge, of course, is this bifurcation piece. That's the splitting of your usage between business use and personal use. And you, the taxpayer, have the obligation to show the records that document how you split that. Once upon a time, when phones were just phones, that was easy to do. You would go through your call log, highlight the ones that were business, and then take a percentage, right? That was easy. It's much harder now because even if you're using some sort of screen activity monitor or something like that, it's not always clear if an app is a business app or a personal one. So it requires a little bit more work on your part if you wanted to claim a percentage of your cell phone, for example, as a business expense. How about software or different subscriptions you might have? Are these deductible? I see a couple nods, couple thumbs up emojis. Yeah, I agree. We definitely want to be documenting the business purpose. Are you sensing a theme, right? We definitely want to document that effectively connected to your trade or business piece. And when it comes to software or subscriptions or anything like that, we always want to make sure we're being safe with our data, backing everything up regularly, all of that. And by the way, if you are subscribing to a cloud-based service for backups, whether that is extra storage space on Google Drive or Dropbox or something like that, that subscription is probably deductible as well. At this point, musicians often ask me if Spotify is an expense they can deduct as a subscription. What do you think? Is your Spotify subscription or other streaming music service deductible to you as a professional musician? I see one no in the chat, one yes from an emoji. I like when there's disagreement. Question, can it be bifurcated? Excellent use of a recent vocab word. And then depends is showing up in the chat, right? So here's where, as a tax geek, things get really interesting, right? Because it isn't necessarily very clear that the answer is yes or no. So from my perspective, that's really interesting. From a taxpayer's perspective, that's really annoying, right? Because then you have to make a judgment call and then make a choice, right? So here's what we would think about. If you are listening to Spotify because you are a fan and you know it's mostly for personal use, I would not deduct that. That feels like a personal expense. But as someone mentioned in the chat, if it's used for events that you're having, or if you are able to bifurcate the usage, maybe you are doing research to build a new repertoire and you're saying 80% of what you're using Spotify for is, researching new music or potential things you might want to perform, yeah, I think you have a solid case that you could claim that as an ordinary and necessary business deduction. Sometimes I will have visual artists who say, I can only paint if I have music in my studio. And I say, that's fantastic. Probably not an ordinary and necessary business expense. But a visual artist who incorporates it into a piece, possibly, right? All of a sudden, there's a stronger argument for it, right? So again, just pay attention, do a gut check, and go through the analysis. Is it ordinary, common and accepted in my industry? Is it necessary, helpful and appropriate to my trade or business? And then, is it effectively connected to the trade or business? Can you explain what the business use of it was, other than just you like to listen to music? And if the answer to those things are yes, I think you can get pretty comfortable claiming a subscription as an ordinary and necessary business expense. One of my favorite questions in the chat right now is, how likely are we to be audited over that? And of course, we know that we never give tax advice based on the likelihood of being audited, right? So the purpose of kind of going through this is to understand kind of what's the analysis you would go through to reach the right or most right answer, right? Now, the practical answer is probably not that likely to be audited, right? Generally, most individuals go throughout their entire lives and are not audited. And If the IRS does have questions about your tax return, generally speaking, if you have the books and records to answer those tax returns, and if you can show that something is ordinary and necessary and effectively connected to your trade or business, then you're totally fine. Question in the chat, hypothetical. What if you receive 90% of your income from W-2 jobs as a music teacher and an orchestral musician? Can you still write off all the deductions that overlap for teaching and gigging on the side? This is a fantastic question. So yes is the answer, although I would be careful with the part of the question that says overlap. So if you are using something in your classroom as a music instructor, right, then you would not deduct that. If there's something that's a little bit fuzzier, right, like maintenance on your instrument that you use as a W-2 orchestral musician and also for gigging, maybe then we bifurcate that based on time spent performing as a W-2 employee and performing as a 1099 musician, right? So that's probably how I would handle that. I would lean heavily on bifurcating. And I would also know that in the case that you're describing, something like a cell phone, you're probably not going to get to 50% of it being used for your freelance income, especially if you have W-2 income. Remember, no deductions for W-2 income and personal use. It's going to be really hard to meet that 50% threshold for something like a cell phone. Comment in the chat that audits do happen. Someone had an audit and had a sizable payment they had to make. So yeah, they do absolutely happen. And oftentimes something will start with a rather innocent inquiry and then additional questions may come up. It's also worth noting that audits can happen at the state level or the federal level. And sometimes they start from the Department of Labor as well. So let's pretend, let's think about a hypothetical here. Let's say a company hires you to perform for its annual "The Pandemic is Over" party, right? And they pay you a $500 honorarium for a performance you do. They do not send you a 1099 because it's under that 1099 reporting threshold, but the company still deducts the $500 they paid you and the 3 other chamber musicians that performed with you, right? Fast forward a couple years, the company gets audited because larger companies tend to have a higher likeliness of being audited. The company is audited. The IRS is examining the compensation they are paying to contractors, and they look and see that you received $500 and that the company deducted a $500 expense. The IRS is going to say, okay, did that other person report that $500, which may cause them to then pull up your tax return. And if you accidentally on purpose forgot to report that $500 because it was under the $600 threshold, then the IRS is going to have questions about why you failed to report that income. And then that could trigger an audit. So there could be, again, this kind of domino effect where questions lead to more questions. So in general, as we all do, we try our best to comply with the laws to the best of our abilities. Here's a callback to the question that came up in the chat a few minutes ago around professional attire. And I've already sort of given you the answer, so I won't make you vote. But the rule when it comes to professional attire is that if you can wear it somewhere else, even if you never would, if you could wear it somewhere else, it is not deductible, right? And that is a real challenge because lots of people argue that if you're performing in a tuxedo, can you really wear that somewhere else? And from the IRS's perspective, the answer is yes, absolutely. Nice weddings, the Met Gala, the grocery store, right? You can wear a tuxedo to other places. I will say though, as a performer, if you have garments that are specially tailored to accommodate your performance, all of a sudden, then it feels like it's no longer appropriate for everyday wear. The example I have here is a jacket that a violinist may have had altered to add additional elbow room or shoulder room to properly execute the performance, right? Or if you have special shoes that you only wear on, marley floors or something, then yeah, you can probably get comfortable taking that deduction. And of course, if there is any safety equipment or something like that, certainly that would be deductible. But I don't know that that necessarily comes up for musicians regularly. There's a question in the chat related to the example I just gave. And this person preferenced it by saying this might be a dumb question. And I guarantee you it is not a dumb question. But the question is, if I don't get a 1099 because someone paid me less than $600, is that still taxable income to me? And the answer is yes. It is still taxable income to you, even if you do not receive a 1099. Because you, the taxpayer, have the obligation to report all income from whatever sources derived. So for example, let's pretend you self-produce an album and sell lots and lots and lots of them. You would not get a 1099 for those sales, but it's your obligation to report that income as the person who's making the sale. The same is true if you are paid an amount that falls underneath one of those reporting thresholds, because that $600 reporting threshold only affects whether or not the business issues you a 1099. Technically, it's still your responsibility to track your income. Because remember, you're running a business and you're keeping all those books and records in a nice, organized way, right? So that's kind of the theory there. And also, one of the reasons there is that $600 reporting threshold is that it would be a huge burden on companies to issue 1099s for, say, a $50 payment or a very small honorarium. So there's meant to be a bit of administrative grace on the reporting side, even though there's still an obligation to pay taxes on that. There's another question or another point in the chat. I think it's a good one. This person shares a mentor once advised them to declare every penny, which I think is good advice, but then deduct like mad, which is absolutely also good advice, right? Anything that is ordinary and necessary and effectively connected to your trade or business should be deductible. Let's talk about research. Do you think research is deductible? I see one yes vote, couple yes. If it's purpose related, yes. Depends, yes, yes, I agree. This is one of those areas where there is a lot of room for judgment, which means that you would definitely want to document the business purpose of the research. Question in the chat or clarification in the chat. This person says, unsure for an additional degree. And I would say, definitely not, right? If you are pursuing a degree, those expenses are not associated with your business. If it's research you are doing to learn more about grant writing, you're not pursuing a degree in that, but you are learning more about grant writing. Maybe you purchase a book on grant writing to increase the likelihood that you'll land your grants, right? That to me, that feels like research, right? I would probably deduct the cost of the grant writing book I purchased, right? So something like that. But if it's an educational expense related to a degree, then probably not. But that also sort of raises the question, what about professional development? So not necessarily research, but professional development. It's not a degree. You're not in, oh, someone just typed that in the chat. I love that we're on the same wavelength. This is not a new degree, but it is something that you're doing as a regular part of your business. Is that deductible? I'm seeing a couple, at least one definite yes, yes, yes. I agree. Professional development, I would say, is definitely deductible. I probably wouldn't call it research. I would probably put a category maybe in that other section of Schedule C that says professional development, but I would absolutely deduct ordinary and necessary expenses there. And same thing with the research, right? We want to make sure it is connected to something you are doing, and we want to make sure that you can document the business purpose. But this is definitely something that I would be comfortable deducting. How about office supplies? This is a pretty easy one, I hope. Deductible? What do we think? Yes, yes, yes. I agree. This one is meant to be not controversial, right? Office supplies, definitely deductible. And depending on your discipline and the type of work you do, this could be any number of things. This could be certainly, pens, paper, pencils, ink for your printer, all those kind of things. But you might also have educational materials that you use, not in your W-2 teaching classroom, but if you teach very young students, maybe you have additional educational materials, and maybe they live in your office, right? So something like that could be deductible as well. Again, we just want to make sure we're documenting the business purpose. How about marketing materials? Are these deductible? I'm seeing some nods. Yes, yes, yes. I know. See, we're getting good at this. Definitely. Marketing materials are deductible. This is true if you are printing show cards or if you are promoting ads on social media. Maybe you are printing cards that will live in a school or be handed out by an instructor at the school for additional lessons, anything like that. Any type of marketing you're doing would be deductible. And I would say this doesn't have anything to do with taxes, but to the extent that you can track the effectiveness of that marketing, that can be a really good strategy going forward so you can allocate your dollars most effectively. That pretty much ends the easy ones. Now I want to talk about home office and home studio. Does anyone have a space in their house where they practice or where they see students or that would be used as sort of a home office, home studio? Yes, yes, yes. I'm seeing some visual thumbs up and some emojis. Let's talk about home office and home studio. This is one of those deductions where you want to absolutely follow the letter of the law for a couple of reasons. Number one, it's not as simple as ordinary and necessary, right? There are some extra hurdles you have to clear to claim this deduction. And the business use of your home deduction lives on its own line on Schedule C. So you cannot bury it in with a rental expense or something else, right? So this is its own line, which means the IRS is automatically going to identify it as a deduction you're claiming. You may have heard this called a red flag item. That's because there are these extra hurdles you have to clear, and sometimes people aren't even aware that there are these extra hurdles. So the IRS knows that this is one of those deductions that is a little bit ripe for abuse. So follow the letter of the law on this deduction. This is not a place where you want to be aggressive or look for any wiggle room. The space that you are deducting must be used exclusively and regularly for your business purpose. Regular use is pretty easy to meet, right? Are you regularly using it to perform or see students or do anything like that? Yeah, probably. But that exclusive part is a little bit more challenging. Sometimes people interpret that as it has to be a separate room, or there has to be a door, or it has to be a separate building. That is not true. That helps, right? It makes it feel more exclusive. But as long as you have identified a space that is only used for your business purpose, then that's okay. This space also has to be your principal place of business for your business. So for example, if you also rent space somewhere else, you probably cannot also take the home office because arguably then it's not your principal place of business anymore. And you have to have no other place where you conduct administrative tasks related to your business. All of which is to say, if you clear those hurdles, then by all means claim this deduction. But I would encourage you to definitely read through these hurdles carefully and make sure you are exclusively and regularly using the space. I've referenced here a publication from the IRS, number 583. It has a really great discussion on business use of your home and a lot of examples there. So if you're looking to read a little bit more, this is a great publication to download. It's on the IRS's website. If you were to claim this, what I would suggest is get a copy of your floor plan. It doesn't have to be like a formal copy or anything. You can just kind of draw it out, but then identify the space on your floor plan that is used exclusively and regularly for your business, and use that to calculate the percentage of your home. So let's say you have 1,000 square foot apartment and you have 100 square foot area in the corner that you have soundproofed and set up some curtains in, and that's where you practice, right? 100 square feet divided by 1,000 square feet in total would give us 10% is the business use of your home. And then we would multiply 10% by your rent or mortgage payments and your utility payments, right? So that's generally how we would go through the math around this deduction. I would also say all of that stuff, the floor plan, the part of the floor plan that's identified as exclusive and regular use, and also the utility bills, right? And the mortgage or rent bills, that should all be in your tax file because that's the documentation you'll need. I would also say, this is not required, but I would take some images of the space when it is looking its most professional, just to add those to your tax file as well. So that if you move during the statute of limitations period, so the time period when the IRS can audit you, you will still have evidence of the business use of your home that you claimed. So that would be my gentle and loving suggestion. Are there questions about this deduction? I know this is a tricky one, so I'll pause in case someone is furiously typing a question in the chat. All right. Before I move on, I will say, let's pretend you had a situation where you decided you wanted to permanently teach students online because you loved teaching on Zoom so much, you wanted to continue doing that. And you decided that you needed a dedicated internet connection for your home office or your home studio to facilitate that, right? In that case, you might not want to simply take the percentage of your Wi-Fi bill, right? If you have a dedicated line for your business, whether it is phone or internet or anything else, as long as it's dedicated, you can take 100% of that cost, but then you wouldn't also take a percentage of your home Wi-Fi bill. So hopefully that clarifies. If you happen to be a composer or a musician that uses a lot of electronica or something like that, you also might have a dedicated meter for managing the electricity to your studio. This feels a little extreme. Usually we see it with artists that have, very, very electric heavy equipment, right? And sometimes that comes up for musicians. But if you have a separate meter, right, for a studio space that you built out in your shed or barn in your backyard, or for example, in that case, you would take the full cost of that separate meter as well. So you don't always have to do the percentage calculation. Once upon a time, we traveled for business, and my hope is that we will do that again at some point. So when it comes to travel meals, and lodging, all of these expenses are deductible as long as the primary purpose of the trip is business related. When we're talking about travel as well, in the IRS vocabulary, travel means there is an overnight stay. If you are driving to a gig and then driving home afterwards, but there's no overnight stay, that travel is still deductible, but we would call that business miles driven probably, as opposed to travel, because travel in the eyes of the IRS does require an overnight stay. This is one of those areas for musicians that can be tough because you have to separate out travel for a W-2 job you may have had versus travel for gigs you may have performed for, right? Because remember, any out-of-pocket travel you incur for your W-2 job is not deductible. I would argue your W-2 job should be reimbursing you for that travel, right? Especially, let's say you're performing with a production that is being launched in DC, and it's sort of a three-week run, and you're going to have to be in DC for 3 weeks. The production should be reimbursing you for those per diem rates for you to be in DC, or they should be paying for your meals and lodging out of pocket, because if you are a W-2 performer, you get no deductions for that. Now, if you're gigging in DC for 3 weeks, totally different story. Ordinary and necessary and effectively connected to your trade or business. So again, pay attention to how you are being compensated for something. Business miles driven would be use of your own car to travel somewhere with a business purpose, right? So in this case, you would want to track the miles driven and then multiply them by the standard IRS rate. Unlike business use of your home, where you have that exclusive and regular test, that does not apply to your car. So this would be any business miles driven with your personal vehicle, and then you would multiply those miles by the rate. For 2020, the rate was 57.5 cents per business mile driven. Going forward for 2021, it's 56 cents. The IRS adjusts this about once a year or so, sometimes more or less frequently, but just know that that's the rate that you'll be thinking about going forward. And that is meant to cover gas, maintenance, insurance, sort of all sort of car related expenses. So you would not have additional expenses beyond that, unless they were expenses for parking or tolls or something like that, because those would be separate. They wouldn't be counted as part of the car maintenance rate. Here's a question. Is travel for a professional development overnight purpose, like a chamber music festival, deductible? Also, are such festivals considered professional development? Great question. I would say yes, those are considered professional development, and travel for that event, as long as the primary purpose of the trip is to attend this professional development experience, I would say, yeah, that's deductible. I would say you might have some extra questions come up if the festival, maybe there were a couple of versions of the festival, and one was taking place in South Carolina, and then another one was taking place in Belize. And if you chose to go to the one in Belize, the IRS might say, really, you couldn't have gone to the one in South Carolina? So I would say if you are going somewhere that feels luxurious and also like a vacation, make sure your business purpose is pretty ironclad and the primary purpose of the trip is something that you couldn't do anywhere else. But yes, that feels like a deductible business expense to me. Question in the chat, can business miles be deducted for a W-2 job? No, they cannot. I'm sorry, but that is an opportunity for you to ask the W-2 job if they will reimburse you for those miles, which would be reasonable for them to do if they require you to drive as part of your job. Commuting probably wouldn't be deductible ever under any circumstances, but if for your W-2 job, they ask you to, travel to 2 or 3 different places during the day, they should be reimbursing you for those miles. Question, a hypothetical in the chat, not a hypothetical, an actual scenario. This person bought a plane ticket for a performance that was canceled. The trip was canceled. The $500 ticket now sits as a credit, and you have to use it or lose it by the end of 2021. Do you deduct the expense in your 2020 return? You have no plan to travel. Yes, I would deduct the expense in your 2020 tax return because that's when you purchased it. And if you are able to use it, fabulous. If they extend it further because travel might not be back to normal in 2021, even better. And so let's pretend you are able to use it this year. You just wouldn't have an expense for this year, right? Because you paid for it in 2020. So as long as you don't deduct it twice, you're totally fine. But you paid the cash last year, so I would deduct it on your 2020 return. Another question, pandemic office mail runs were reimbursed for you in 2021 for your W-2 job, mileage and parking. Awesome, that is fantastic. I'm glad to hear your employer was doing that. That feels like the correct and ethical thing to do, which is wonderful. Good stuff. This notes as well that your documentation of your business miles should be written. We know the IRS loves written things, right? Which is great. Some people keep like a little notebook in their car. That's a great option. Other people keep a like an Excel spreadsheet or a Google Sheet spreadsheet that lists the different sort of trips you take and how much miles you had, and then what the purpose of that trip was. Add the date to that log as well, and that is also perfectly fine. Some people even use an app. The most popular one is called Mile IQ. And if you have a smartphone with GPS enabled, in that case, it will track as you're driving, and you can just specify if you're driving for a business purpose or a personal purpose. If you do choose to use an app like Mile IQ, just make sure you're getting the data out of the app somehow and saving it in your tax file, just in case the app doesn't still exist in the next few years before your statute of limitations ends. Another point in the chat about reimbursement for business miles in this particular example is to ask for it. And I think that's really wonderful. So definitely ask if there's an opportunity for you to do that. Business meals is a moment where there has been a change. So I want to pause and draw your attention to this. In general, you may deduct expenses you spend on meals as long as there's a business purpose. Now, we're not talking about travel meals right now. So if you're traveling and you have to purchase a meal, yeah, absolutely. But for business meals, like let's say you have lunch with someone that you are thinking about collaborating with, for example, that would be an example of a business meal. And the general rule is that that is deductible, but there's a 50% limitation on that deduction. That is all well and good and true. And with the legislation that passed in December, it was called the Consolidated Appropriations Act of 2021, Congress extended this extra business meal bonus of sorts so that in the year 2021 and the year 2022, if you have business meal expenses, they will be 100% deductible to you. Now, the message is not have all of your meals at restaurants, but Congress was basically acknowledging that restaurants could use the business, and we know lots of policies are nudged through the tax code and what we incentivize and don't incentivize. So if you find yourself, as you are conducting your business in 2021 and 2022, having some meals, as long as there is a business purpose associated with those meals, and as long as the meals are not lavish or extravagant in IRS parlance, then know that 100% of the meal is deductible. I will also note, once upon a time, entertainment was deductible. So let's pretend you had a client or you were wanting to work with a particular audio engineer or producer, and you said to this person, hey, let's go out to a baseball game. We can chat about the project and then we'll watch the baseball game and it'll be great. We would call that entertainment, right? Once upon a time, that was deductible. That is no longer deductible. Now, in my experience, that doesn't really affect professional arts entrepreneurs or musicians in a really substantial way, because you don't do a whole lot of client entertainment. You attend events, you attend professional development, and you do research, but you're not necessarily taking somebody out to a baseball game to schmooze them or something, right? So that change you may not have noticed because it may not have affected you, but just know, entertainment no longer deductible. Question in the chat, is it a hard rule that deductions can only count for the year you actually spent the money? I would say in general, yes, but there can be exceptions. This person goes on, for example, I spent money on something in December of 2020, but you didn't receive it and use it until January. You didn't deduct it for 2020. Can you deduct it for 2021, or is the opportunity lost? My preference would be for you to deduct it in 2020, but it's not the end of the world, right? So if you received it and used it in 2021, and maybe, it's not the end of the world, right? I wouldn't lose sleep over that if you deduct it in 2021, but my preference would be to deduct it in 2020. So, don't panic. If you've already filed for 2020, I would say you're probably fine, just deduct it in 2021. But know that the best practice general approach is to deduct things in the year they happened. The reason I'm not going to lose sleep over this is because it was right at the end of the year. There may have been some overlap, right? It's probably fine. So that's why I wouldn't lose sleep over it. But in general, if you can pay attention to that timing and, wait a week before making the purchase to make the tax years match, that would be a good thing. I hope that helps. Professional memberships are generally deductible. Again, we want to document the business purpose. And I will say, depending on the types of groups you are a member of, the receipt might say something like, "Thank you so much for renewing your membership in our organization, Professional Musicians of America or Chamber Music of America," or something like that. Your dues payment of $200 was received. Thank you very much. $20 of your dues payment is spent on lobbying expenses. If there's language like that in your receipt, that's telling you that a portion of your dues are not deductible. That's pretty common. So just, pay attention for that as you are going through your professional memberships and deducting those. I will pause here. I think I have caught the questions that came up in the chat, but if I missed any, by all means, put it in the chat again. But in general, that's what we're thinking about for Schedule C. All of the income you have associated with a business that you are running, minus all of those ordinary and necessary business deductions. And then the net amount flows from Schedule C onto Schedule 1 onto your Form 1040. Then we get to adjust those amounts. And here's where we get to Part 2 of Schedule 1. And this is where you may have heard of or know about some of these adjustments to your taxes. These are things that basically are deductions, right? They're usually reducing your taxable income, but they're not related to a business. These tend to be personal expenses that are allowed to be used to reduce your taxes. So one common one we see a lot, tuition and fees deductions. Remember how we talked about how expenses for another degree are not deductible as business expenses? You can deduct tuition and fees right here as an adjustment to income. There are limits to it, right? And the amount phases out as your income goes up as well. Nobody is deducting the entire cost of their education, but know that there is a little bit of a tax benefit there. And also, if you have student loans and you are paying interest on those student loans, the interest is deductible as an adjustment here as well. Again, that deduction phases out the more money you make, but it does exist. We also have adjustments to income for contributions to a health savings account you might make. This is a great opportunity if you have a lot of self-employment income and you are looking for adjustments to income. Making contributions to a health savings account can be a good strategy. This kind of works like an IRA in that your contributions reduce your taxable income, but you can only use the dollars for qualified health expenses. So, that could be an opportunity if you're looking for ways to reduce your taxable income. Also, if you are self-employed and you have no other access to insurance through a W-2 job or through a spouse's or partner's insurance, then you may deduct your health insurance here as an adjustment. And then, of course, you can contribute to retirement. If you are self-employed, you may contribute to an IRA. The annual limit right now is $6,000, higher if you are on the older end. You can also make a self-employment retirement contribution. There are various plans. SEP IRA tends to be my favorite, but there's one called Simple and then a solo 401k. These are all opportunities for self-employed individuals to contribute to their retirement, similarly to how you would a 401k, for example, if you had a W-2 job, and get a tax benefit for that. Publication 560 is a really good one if you have self-employment income and you want to explore some of these options. I will also say the CARES Act helped in 2020, the year 2020, and allowed individuals to make a $300 charitable contribution that is deductible as an adjustment. That is a strange sentence to say, but deductible as an adjustment, because up to $300 you can deduct even if you take the standard deduction. Now, normally, if you make charitable contributions, you only get the tax benefit if you itemize your deductions. But in 2020, the CARES Act said, you know what? Lots of organizations could use help. Every single individual can contribute up to $300 to a qualified nonprofit organization and deduct that as an adjustment to their taxable income. There's a question in the chat about the limits on IRA and SEP contributions. For 2020, the IRA contribution limit is $6,000. For SEP, the limit is 20% of your self-employment income. So you would look at line 31 on your Schedule C, and then 20% of that would be the limit to your SEP contribution. And IRA and SEP are cumulative, right? So you can do both of those. And then the overarching limit is how much you can defer from your income for the year. And I think it was around $55,000 for last year. The amount is indexed for inflation, so sometimes it adjusts a little bit. But you would want to look at 401k or 403b deferrals, and then also any of these other deferrals, and make sure you are under the overarching limit. I hope that helps. Another question, could I share other trusted resources on portable benefit types like IRAs? So IRAs are great, of course. Health savings accounts are good. So the resources that were referenced in the IRS publications earlier might be helpful. You will be getting a copy of this slide deck later. So if you didn't jot down those numbers, A-okay, you can always go back to them. And I would say NerdWallet and Smart Asset are two of my favorite resources for unbiased, solid financial information that is not also trying to sell you something. Not that I'm opposed to people who are trying to sell me something, because companies like Fidelity have great investment research and insights, but they're also trying to sell me something. So NerdWallet and Smart Assets are good resources to sort of gut check some of those things. The standard deductions for 2020 are listed here. Every taxpayer gets these standard deduction amounts. So to recap, we've added up all of your income from all of the sources. We've reduced it by your business expenses, and then we've reduced it further by any extra adjustments you have. Then we wipe out $12,400 of taxable income if you are single, more than that if you have a different filing status. But some people choose to itemize their deductions. All this means is we look at yet another schedule. This one is Schedule A, and Schedule A lists out certain things that are essentially personal expenses, but they are deductible. So as you're going through Schedule A, you look at all of these things. Some of the most common ones are listed here, but this is not an exhaustive list. And if these things add up to more than your standard deduction, then you would choose to itemize. Why? Because it's better for you. You're reducing your taxable income by more, right? So you get to choose based on what's better for you. And the standard deduction or itemizing your deductions is an either or choice. And you still get your Schedule C deduction. For some people, that's a little confusing because sometimes we think, oh, I don't get business expenses because I'm not itemizing. Not true. You get your Schedule C business deductions, regardless of whether you take the standard deduction or if you itemize, right? And that is perfectly fine. Different worlds, different geography within the tax form. Once we get to our taxable income, that amount informs where we file for state and city income taxes as well. In general, you have your tax home, that is where you are based, and hopefully where your business is based, and it's one place. And if you happen to be somewhere else in 2020, you may have had additional income from other places as well. So my advice would be pay close attention to where you are earning income, just to see if you have additional income tax obligations. In 2020, this may have come up if you spent extended periods of time somewhere else. In normal years, this might come up if you had extended performance residencies somewhere, or if you were touring, for example. So those are just good things to pay attention to. Question in the chat, if you have a CPA doing your taxes, what lines should we be spot checking on your returns? Ooh, that's a really, really good one. I would definitely spot check Schedule 1 because that'll show you your business income, and your S corporation income will flow through to Schedule 1. I would look at line 24 is one of my favorites. That is your total tax. That is a good one to pay attention to, just to be informed about how much you and your spouse, if you're filing jointly, are paying in taxes. And then line 31 is the amount that you paid in during the year. So that's a good one to pay attention to as well. That can help you know if you need to make more estimated tax payments or less based on whether you're getting a refund or not. But I would say, as silly as this sounds, when you get a copy of your tax return, I'm a paper person, so I would print it out and I would just kind of go through. Give yourself plenty of time because, as we've discussed, it's not intuitive, right? And you're going to have to flip around a lot, which is insanely annoying. But it's amazing what you'll start to notice. And then you can start to notice similar things in future years. And before you know it, you'll just have so many good things to talk about when it comes to taxes. When it comes to your total tax, we take our taxable income and multiply it by the income tax rate. You'll see them presented here. We have a progressive tax system. So as your taxable income goes up, the tax you pay goes up as well. And if you have self-employment, you are probably paying self-employment tax as well. So if you're looking at that total tax line on your tax return, you will see your tax from self-employment, but then also any other taxes and tax credits you may have had. Your self-employment tax is basically Social Security and Medicare, and it is generally automatically calculated as you are going through this tax return process, but it is a little bit of an annoyance for many people. My advice would be, if you are self-employed or have self-employment income, do a little gut check to make sure you are charging enough to cover all of your expenses and payments to yourself and this pesky self-employment tax that you are responsible for. There's a question in the chat about tax software for performers. Great question. The company I typically recommend, and full disclosure, I do not prepare tax returns anymore. That is a lifestyle choice. So I have the privilege of just recommending others. I generally recommend a company called Brass Taxes. They are all online. Their rates are incredibly accessible, and they specialize in working with freelancers, performers, sole proprietors, LLCs, S corporations, you name it. So they know their stuff. They also operate in all 50 states plus the territories. So if you travel around or that is part of your normal, they have the expertise to manage that for you. If you want a specific recommendation that's more tied geographically to a place, feel free to shoot me an email and I'll tap into my network and see if I know anyone. I will say there are also tax credits as well that you might be eligible for. Dependent and child care credits have been in the news lately. These were increased as part of the Tax Cuts and Jobs Act. And these are good credits. We like credits because they reduce the actual amount of tax you owe. And there are also opportunity credits. And in this year, if you received a stimulus payment, there was confusion around whether the stimulus payments last year were taxable income. They were not. They were treated as refundable credits, which means they reduce the tax you owe by more than zero, or they can take it to more than zero so that you get those dollars back. And the way this was written into law is that these were just paid in advance. So if you did not get your full credit amount, you can still get it when you file your tax return. I will say as well, there is conversation around this most recent legislation about whether an additional stimulus would be a refundable credit, and that is still a question mark. So stay tuned to the final legislation. It will probably not affect anything until you're filing your taxes next year, but that's something to pay attention to because it could be a change from how the recovery rebate credits, i.e. the stimulus payments, were treated last year. We look at then how much you paid in during the year. And then, oh, I think I said this was line 31, your total payments to the person that asked about the lines to spot check. 33 is your total payments. That's the one I would pay attention to instead of line 31. And we look at how much you paid in during the year and then compare that with any estimated tax payments you may have made. Now, if you have a W-2 job, right, they're withholding taxes. And if you know you are going to have income from self-employment, just ask your W-2 job to withhold a little bit extra to cover those tax payments. That way you don't have to worry about your quarterly payments. But if you want to make them, they will show up here on line 26 as well. Line 24 is not in this picture, but that's your total tax for the year. And then we compare that with what you paid in during the year. And that's how we figure out if you owe more money when you file your taxes or if you get a refund. So this is basically how that math works. In this particular example, this person that owes money, since they owe more than $1,000, not in total tax, but in what they have to actually pay when they file their tax return, this person may have an additional penalty to pay, in which case you would definitely want to think about making some of those estimated tax payments the following year to avoid that penalty. There was another question in the chat about accounting software for small businesses and sole proprietors other than QuickBooks. The one that has been getting the most attention lately has been Wave. People are crazy about Wave right now. I also have a couple of organizations and groups I work with that are using Xero, spelled with an X, which is great. Both of those are really, really good options. And in fact, I'm just going to fast forward to that slide if you would like, because here's an image of some of the software programs that people really like. You mentioned not QuickBooks, which I totally get because it was designed by accountants, right? I love QuickBooks, but I recognize that is unique to me. Most people don't, but QuickBooks is great. FreshBooks is one that a lot of creative individuals like. It's very similar to QuickBooks, although it has a more aesthetically pleasing layout. They use cooler tone colors, it's more intuitive, and they have a great invoicing option. So if you regularly are invoicing students or individuals that need to pay you, FreshBooks could be an option. And then here's Xero and Wave. Those are the two that people love. I will say as well, if you're looking for a personal system, YNAB and Personal Capital are both options that people love for personal tracking. They're not so good for business tracking. They can learn, but they're just not so good. But you know, there are options there for personal as well. You can also just set up your own database system in Excel or Google Sheets. You know, if you are at a point where you don't have a ton of transactions to track and you don't want to spend the money on a software system, then Google Sheets or Excel will work really well. And here's how I would suggest setting it up. Just some basic columns. You can export all of this information except for the business purpose from your bank account and then save what you need. You heard me say probably about 500 times that we would document the business purpose for all of those deductions. This is what I mean. I mean, describing and explaining how the expense is effectively connected to your business. And you can do that in a column in your favorite spreadsheet system, or you can do it in QuickBooks or FreshBooks or Xero or Wave. There's a notes field where you can just describe the expense, and that is perfectly fine. Here are those options repeated again if text is your thing rather than images. And then you want to make sure you're saving all of this information for 7 years. That's the extended statute of limitations. So for example, if you have an expense at the beginning of this year, say in January, then that would show up on the tax return you file next year in 2022. And that is when your 6-year statute of limitations starts. So that's how we get to a 7-year calculation. My advice would be to set aside 2 hours on your calendar each month just to stay on top of this. I know it is not the most pleasant task, but if you're on top of it, not only will your records be in really good shape, but you'll also have some extra insights about who pays you right on time, or, you know, when you might need to increase those rates a little bit more, or also just kind of what are the broad categories of what you are spending your money on. I apologize for wrapping that up a little quickly at the end, but we were running short of time. As I mentioned, you will definitely get a copy of all of these materials and access to the recording if you'd like to listen to it again. Question in the chat: are research grants awarded for specific artistic projects tax exempt? Probably not. Those are probably taxable grants to you. So my suggestion would be pay attention to the year where you receive those funds and make sure you have the expenses in the same year you get the funds. So sort of like the example we talked about earlier, let's pretend you get a grant in December, but you don't have any of the expenses until January. You're probably going to get a 1099 for that grant income in December, and you wouldn't have any expenses to offset against it. So pay attention to that timing. The possible exception could be if you received a grant through a fiscal sponsor. So let's pretend you partnered with NextFest and they agreed as a 501c3 to receive your funding and then reimburse you for things. In that case, that would be tax exempt income to your fiscal sponsor, and they would report all of the expenses. However, if you had an honorarium as part of what you were doing, that would be taxable income to you. I hope that helps. If you have additional questions about that, whether it's timing or if it's, fiscal sponsors or anything like that, feel free to reach out. And you are very welcome anytime, anytime. Peter, I'm turning it back over to you.
Thank you so much, Elaine. I just am always amazed by how you can make this seem relaxing and enjoyable and a challenge that we all want to go run off and tackle right now. I think it's a gift. And I can speak for everybody here who is very grateful for your time and your expertise and for answering lots and lots of questions, because there's lots of questions that we all have. So thanks for that. Thanks to all of you for coming today. In the chat, I put some links that might be helpful. I will be following up with an email to all of you, including the links to the slides that Elaine was sharing with us today. We have workshops coming up the following 2 Thursdays with 410 Media, diving deep into how to create video, especially creating great video content at home. So we hope you join us for those, and we have amazing artists and lecturers coming up for the months of March and April. Elaine will be back in April and again in May with additional workshops. Hope you could join us for those. We'd love to have your support. We make all of these available to you for free, and we pay all of our artists and workshop leaders. So thanks for being here. Hope to see you on Thursday. Hope to keep on seeing you throughout the months of March and April when we've got an amazing festival coming up in June. Stay tuned. Thank you so much. Bye-bye.
Good night, everyone. Bye.
Good night.